Okay, right. Right, so we were obviously just calculating there quickly whether we made a profit or a loss. Now, in the interest of time, I'm just going to go to our suggested answers, which is right here. Okay, we obviously did the timeline just to break down in a nutshell. Just to break down in a nutshell what we're dealing with, how to approach the question. Okay, so let me just zoom in here real quick. Okay, so there you can see the timeline as well. And then you can find the depreciation there, 2,625. Depreciation on the second period. Remember, we're doing depreciation on straight line, not on the decreasing balance method. So we didn't deduct. And then you've got the total depreciation for the period. Then to get the carrying value, we're saying 35,000 minus 7,875. Okay, so there we have our carrying value. Then now we say selling price minus that, which we're doing right there. You've got 875. Can you see the selling price is greater than the carrying value? So we have made what? Profit or loss? We have made a profit. Okay? And then you must just clearly state that as they requested you guys do. Okay? So that was question 1.2. Okay? Then we go to question 1.3. And in 1.3, they say give the general journal entry for depreciation for the year. No narration not required. Okay. So what's going on here? It says the financial year ends 30 June. The following balances appear in their books. 1 July 2016. Vehicles 327,000. Okay. Accumulated depreciation 114,450. Vehicles are depreciated at 20% per annum, according to the straight line method. No vehicles were bought or sold during the year. You see that, you should be celebrating, because that means that's less work that you need to do. Okay? There's no disposal, in other words. Okay? And at the same time, there's no addition, so there's no additional calculation for depreciation. All right? So they basically want us to record this in the journal on the straight line method. So we don't even need the accumulated depreciation here, because this is on the straight line method. So literally all you're doing is you're saying 20% of the vehicles, all right, and then recording it in the general journal. So here what they're really actually testing you on is, do you know how to record depreciation? Okay, so there you go. You can see our calculation. You can see depreciation. You know we netted that because it's an expense. And accumulated depreciation, negative assets, so we're crediting that. And here in the narration was provided, although we did not need to do that. So depreciation on vehicles or depreciation for vehicles, all right? And or you can also say depreciation adjustment on vehicles. All right, so let's go on to 1.4. Yeah. Okay, so here, calculate the new interest of the member if a new member is admitted and acquires a 35% stake in the CC. So this is 35% of the CC, not 35% of somebody's stake. Does that make sense? So it's a straight 35%. Okay. The new member is so and so. Calculate to 2 decimal places. Alrighty. Okay. Cool. Do they give us any other information? No, they do not. Okay. I'm just going to scroll down for now. Let's go and have a look at our suggested answers. Okay, so there you can see, okay, interest before this member buys in the CC, that's exactly as they gave it to us. It was in the 0%, then change in percentage. Okay, so how do we do that? We're saying each member needs to give 35% of whatever they have to the member who's joining. Okay, so 35% of 40%, we got the 14 there. You can see we made it a negative. Okay, now you guys, if you have sufficient space, you can actually put that in the space, the calculations. But as you can see, this looks a whole lot more neater. All right, so it's really up to you. Either way, you'll still get your marks, but try and be as neat as possible. I know you guys are under exam conditions, so you might feel there might be a little bit of pressure. All right. So I understand if you guys make a mess of things, but at the same time, try and do it. Okay. So this is in rocket science. So here now we see what the new interest is of each partner. Okay. And then make sure you do this in brackets so it's positive, and then voila. Don't forget to throw the percentages at the end as well. Alrighty. Right. So that is 1.4. Right, then 1.5, you can see there, they're asking that we do the appropriation account. Okay, the appropriation account. I skipped 1.5. Right, so there it is. So here it says prepare the appropriation account for the year ended 30 June 2017. Ignore dividend taxes. Okay. Right. So let's see, is there any other? Okay, there's no. The following information relates to. Okay, that's fine. So, appropriation account. Remember, the appropriation account is the account we use to distribute profits either between members, therefore they're in the CC, or partners, because they're in a partnership. Okay. Either way, we're doing the same thing. Okay. So, this information on 1 July. Remember, we're doing it for 30 June 2007. So, if this information on 1 July 2006. That's obviously your opening balance information, okay? But in the appropriation account, we don't use members' contributions. We are, however, going to be using retained earnings. Because remember, we're using this to distribute profit. So here we go, okay? So there are some amendments as we're going along the way, okay? So we usually start with profits. They give us profits. They shouldn't, yes? Let me just quickly look here. As opposed to giving back. They did give it to us, huh? So you've got your profits before taxes. Okay, there we go. So you start there. Okay. Basically, this is the profits before any adjustments need to be made. Okay, no problem. Then we go to retained earnings. So this is opening retained earnings, which we had for 1 July. Okay, so that's the total that we have there. Then we say to ourselves, okay, cool. What money or adjustments do we then need to take off? Okay, we had SARS income tax. Okay, now there was a bit of a trick that they had there in the question. You'll see if you look at the information there, and let me just turn there now. Also for my, you'll see there we have SARS income tax and we have income tax payable for the period. Okay. Now, income tax payable is a current liability. Okay. So that's not going to go off of your appropriation account. However, SARS income tax, that's definitely going to go off. Because remember, your income taxes an expense, one. Okay. And therefore, since it's an expense, it's something that's going to go off. A liability you might pay later. Does that make sense? Okay. Not might, we will. Okay. Then here they've even also given us distribution to members still to be made out of net profits. Okay. So they've actually calculated that for us. So here what they were testing was, do you know what should go in the appropriation account? And that's why the first thing that I did, sorry, I don't need to do this. The first thing that I did was to tell you the purpose of the appropriation account, distributing profits. There you saw, if you look again on the, you'll see that there's the carrying value for equipment. What do we need that? We don't need it. So we totally ignore it. Okay. So there we go. We've got SARS income tax, and then we've got our distribution to members. And then the retained earnings. This is something that you need to then calculate as a balancing figure. It's going to be the difference between what we have. Because remember, this appropriation account is a temporary account. So it's not going to exist past year end. Okay? And then remember, it increases on the credit side, decreases on the debit side. So let's quickly calculate there. What is the difference that should go in there? What is the difference? Now, I don't have any way to write this since I'm on PDF. Actually, let's see. Maybe I can do something. Is this gonna work? There we go. Let's do that. There we go. So let me just kill this for 2 seconds. Okay, so we have 283,500 minus 112,800 and minus 93,513. What is the final amount that we get there? What should we have as retained earnings? 187. Okay, and you are then home and dry. 6 marks for free. Okay. So as long as you know what the appropriation account is all about, you should then collect those marks there. Okay. Let's see now. Let's go on. So the next bit, they say 1.6. Prepare the statement of changes in equity for the year ended 30 June 2017. Okay. And then they give us this extract from the trial balance. Let me zoom out just a bit. Extract from the trial balance. Let me hide this. Okay, at 30 June 2017. Okay, so you got your capital. Wait, didn't they ask us to do this? 30 June 2017. Okay, drawings to prepare the statement of changes in equity. Okay, that's fine. Drawings, property, plant, and equipment. Okay. So again, guys, we know the formula for calculating changes, the statement of changes in equity, which is the same as calculating your new capital balance. We know that formula, right? It's your capital plus your net profit minus your drawings. All right, you would add in any additional capital contributions. All right, assuming this would obviously then assume you're getting your capital contribution not at 30 June, but at 1 July 2016. Let's give you that one. Okay, so then what else? That's all we would need. Okay, let's see what information, additional information. The owner that made an additional contribution on 1 June. This contribution has already been recorded. Okay, so since it's been already recorded, we don't need to include it. Okay, the owner also took inventory, the cost price of the selling price. So this is basically an additional drawings calculation. Okay, this transaction still needs to be recorded. Yeah, so that's the drawings. Okay, makes use of the perpetual inventory system. Okay, right. So drawings is going to be affected, trading inventory is going to be affected, but obviously we're not worried about trading inventory. We are just worried about the drawings. Okay, so right. I'm not too sure if we did everything here. Okay, so there's your capital balance. Okay, the additional. So again, sorry, we should have used the 752,400 there because they were saying that's 30 August 2017, right? And they said this has already been recorded, so we can ignore this. Okay, then so we made an error there, and then obviously drawings, there's that additional calculation, and there you have it there in B. We were saying the 17,000, but let's see now. This 17, wasn't it? That's the cost price. Okay, so that's fine. You can take that as is. Okay, we add that to our drawings. So our drawings changes to the 53,240, which is exactly what we did. And then did we make a loss or a profit? Let's see. It's a loss. Okay, so since it's a loss, we obviously need to deduct. If it was a profit, we would add, and then you would get your new capital balance. Your new capital balance. Okay, and that is your statement of changes in equity. Okay, let's see. That's it. That's all they wanted there. Wow, can't believe we're taking so much time just on question 1. Okay. Right, so just give me another 4 minutes. Okay. Because we did start late, and then I'll give you guys a break, and then we'll proceed. Okay. Use the information above from the financial records, okay, to calculate total sales. Okay, here. This was another tricky one, and here you needed to apply your mind. Okay. So total sales. For starters, we know debtors is going to be relevant for us. Do not keep the full full records of all transactions, they were able to provide you with the following. So this is like an informal business. So this is the stuff you'd be doing in Unit 7. Okay. All right, 30 June 2017. Okay. So payments to creditors, that's irrelevant because here we want to know about the total sale. So payments to creditors is totally irrelevant. Payments by debtors and cash sales, that is completely irrelevant. Okay? Because remember, we want the total sales. If we're receiving payments by debtors, it's because we made a sale to them. Does that make sense? And cash sales, obviously, don't want to say. So we're taking that whole 253,000, okay, 440. Then settlement discount granted to debtors, okay, and then we have returns by debtors, and then we have credit losses written off, and then we have debtors, all right, at 30 June 2007. Okay. Right. So then, very important thing. What we then now need to do is to say to ourselves, okay, cool. We know that our debtors, right, in order to calculate how much, remember, because that's the opening balance, that 43,560 has not happened in this financial period. It's the opening balance. So it means those sales happened prior, but people were still owing us, they hadn't yet paid. Does that make sense? So to find out the movement for our debtors, all right, you then say the 43,560 minus the 44,880. Okay. Now, if this is your debtors at 30 June, right? Credit losses obviously reduces your debtors, right? Because it's somebody who owed you who hasn't paid you. Returns by debtors, again, same thing. Somebody who bought on credit but then is returning goods. So it's reducing how much is owed. Then we have settlement discounts granted. So we are the ones giving out the settlement discounts. Does that make sense? That would also reduce your debtors. Okay. But now, these are things that will happen during the financial year, right? Now, all of these, as they have happened during the financial period, would reflect in your debtors at the end. Does that make sense? Because we have recorded them already. So are we going to use these again if this already reflects those adjustments? Yeah. So the only two things that you actually need here is to minus and find out what your debtors, your opening debtors for 43, minus the closing debtors for 44. Find out what that movement is and add that to your payment by debtors and cash. The discounts as well, this we would have incorporated in your debtors control. It would reduce your debtors. Is the figure of the discount. Yeah. I think that's just, it's just a coincidence. Because then basically we will say we have no credit sales. Does that make sense? Or we have no sales that people still owe to us, which I think would be incorrect. And we also have said that this has already taken effect. Okay, so I just wanted to explain that. I think I've already taken my 8 minutes, right? Okay, I'll just quickly talk to this as well, and then I'll let you guys go, so that when we come back, we're dealing with question 2 on it. Okay. So here, they said use the information above from the financial records to calculate capital balance on 30 June 2017. Remember to show all your workings. All right, they said do not keep full records. Okay, these guys do not keep full records. They were able to provide the following information. Again, this is Unit 7. Okay, so like I said earlier, some of you guys were not here. We are not skipping Unit 7. I told you guys, Unit 7 is something you guys need to go through. And why am I giving it to you to go through? Because remember, Unit 7 is a accumulation of everything that we've done from Unit 1 up until now. And what happens in Unit 7, okay, is we're saying She's an informal trader. Maybe she sells vegetables. I'm a car guy. Okay, these are informal businesses, but they still make money. And now these informal businesses might come to you and say, I know you know something about accounting. Please, can you provide us with financial statements so that we can go and ask for a loan from the bank, or so that we can get investors, etc., etc., or for us to know how we're doing. Does that make sense? Okay. So it's now your job to take whatever information they have provided you and then make financial statements. So here is this short question. So here they just ask you to do your capital balance. So here, can you see any, have they given us the old capital balance, new capital balance, our net profit? They haven't given us that, right? So we need to use the other way of calculating your capital, or in other words, your owner's equity, all right? And we know that to be assets is equals to owner's equity plus liabilities. Change this formula, throw the L that side, it's assets minus liabilities is equals to your owner's equity. And that's how you deal with the question over there, okay? We won't actually do it. Now, remember what I told you guys in 1A? If you cannot identify something to be an income element, I've already lost. This is one. If you can't do that yet, how many marks? Already got 13. Boom. Goodbye. See you next year. All right? All right. Cool. So that, guys, is your section 1. When we get back, we will we'll try and deal with as many as possible other questions. But our question 5 is not relevant for us. The syllabus has changed. Yes, Mary? Sorry, guys, can we just give it a chance? You might be asking something relevant for all of us. Yes. Yes, we would do that. That's exactly what we would do. Because remember, accumulated depreciation is reducing the value of your asset. 100%. Okay. Right, guys, let's take a break. Can we just take 5 minutes so that we can cover as much as possible? So, guys, can I see you at 5 past 11?